back to Intel. The Trump administration is reportedly considering taking a 10% stake in the embattled chipmaker. Brian Wesbury joins me now. Brian, I thought we were going to get away from government-led industrial policy with this administration.
You know, if we really look back at history, David, I mean, the 1930s, we were paying farmers not to farm during the Great Depression. In the price control era, the 1970s, we let some companies push up prices faster than others. And so the government's, I mean, this is not new. However, what I thought always is that Republicans, for the most part, believe in free markets, and taking a 10% stake in Intel is not a free market move, and so it does worry me that we're heading down this road. By the way, the latest version of all this started in 2008. I mean, the government owned 90% of AIG during the financial crisis, and Fannie Mae and Freddie Mac were nationalized, and so the whole, you know, this is kind of a continuation of that, but I wish we would get away from it.
All right. Well, next one is a new Democrat report from the Joint Economic Committee, which you used to head, claims that Trump's tariffs threaten $490 billion worth of U.S. manufacturing investments. They say uncertainty over the tariffs could cause businesses to defer their plans. Now, Brian, $490 billion sounds like, even if you accept that number, it's totally dwarfed by the trillions of dollars that have already been promised from companies coming into the United States under Trump.
Yeah, exactly.
So it wipes out that $490 billion.
The tariffs are an interesting thing too, right? Because they are a tax if we look at them, but they have extracted investment from foreign countries and companies. And so that's going to offset. I mean, no doubt there's some uncertainty. I don't know where they get the $490 billion number from. I read the report and they compare it to Brexit. It's not the right comparison. But here's what I think. If let's take them at their word, we're going to lose $490 billion investment. That's going to hurt the U.S. economy. Well, shouldn't Jerome Powell be cutting interest rates because of that? But they only say tariffs raise inflation, so we can't cut interest rates. But hey, if it hurts growth, why don't we cut interest rates? Let's hear that.
Got one more for you, Brian. I want to talk about the latest read on GDP. The economy grew 3% in the second quarter. You nailed that number, by the way. Before it was expected to be much less than that. You said the day before the number came out it would be 3%. You nailed it. I would say, despite the fact that we see reports from Moody's saying the economy is going to slow down, there are all these incentives now, all these tax incentives and regulatory incentives for growth. We may not stay at 3% consistently for the next year or so, but where do you think it's going in the long run?
I still believe we're going to see a slowdown in the economy. We never paid a price for COVID. We locked the economy down, we printed and spent our way through it, and now we've kind of slowed that down. The deficit is coming down. Government spending has slowed, other than for interest on debt. And so the Doge stuff is working. And when the way I say it is the era of easy everything is over. Interest rates are higher, the money supply is slower, the deficit isn't increasing, and I think we'll pay a little bit of a price. But the big, beautiful bill, by locking in these lower tax rates, by locking in investment depreciation, immediate depreciation for investment, that's going to lead to stronger growth in the future. Plus, the deregulation that we have gone through, you know, so a lot of people are saying Trump is moving us towards state-run capitalism, right? You know, this taking 10% stake in Intel, we talked about that. But at the same time, they got rid of some of the gas mileage regulations. They've eased up on light bulbs, ovens, stoves, refrigerators, dishwashers.
And the key is energy. Unleashing U.S.
the energy. So we are moving way away from state capitalism on that. So we can complain about Intel, but that's a little piece of all this stuff that's going on, and all that's going to be really good for growth.
Very good point to mention. Brian Wesbury, pleasure to have you here.
Absolutely.
Good to see you.
Great to be with you, David.